What is your biggest investment lesson of 2025 and their implications for 2026?
For 2025, what's my biggest lesson? I think it's the same as every year. After you have got all the learning and the parts of the puzzle all solved, is consistency, right? Always keep up with the consistency. Don't take your foot off the gas. Because sometimes when I'm on holiday, I do relax and I don't look at the charts, but then sometimes I miss the big moves. So that is the biggest lesson. Always keep reminding yourself on the consistency and keep revising why your strategy must continue to work. This is very important. What is your true edge? Why must it continue on to work year on year, right? Now, going into 2026, because of all this, sometimes, we get frustrated that, knowing all of this, still, the consistency sometimes is not up to where we want to be, And so what we want to fill the gap up is automation, right? So we want to automate a lot of our strategies because we got all the market structure and everything in place now. So we want to automate that so that it can take the consistency at least out of the equation.
Filter out the noise.
Exactly, right?
My lesson for 2025 is that stocks are not immune to bad news, but if the fundamentals are good, they're liable to bounce back very quickly and keep recovering. I think the implication for 2026 is that though we should anticipate a more volatile period than we have had for the past 6 months, if the fundamentals continue in the way they have been, I think dips look more likely to be buying opportunities than anything else.
The retail ownership of the stock market has reached about 20%. That is different. That is what's different this time. 20% retail plus 40% passive means only 40% of the market is controlled by people like me who pay attention to valuation and old-fashioned metrics and not just momentum and is it going up. That's what's different this time. So you have to take that into account with all stock decisions.
The biggest lesson of 2025, don't panic. Basically, what we saw in April of this year was a very sharp sell-off in global equity markets because of the US imposing tariffs on its trading partners, and a lot of stock indices hit bear market territory very, very rapidly. But since then, they have risen very sharply. And investors who panicked and got out of their holdings basically in April or early May would have lost out and also would have missed out on very strong gains, with equity markets around the globe hitting record highs. So if your investment horizon is above 5 years long, don't panic. Keep averaging in with regards to your investments, keep buying stocks and hold them, because any performance over a 5 to 10 year time span usually does make back the losses that you see in the short term.
It's all about management, confidence. It helps if you know the management. You need to get some access to these guys. You need to be sure that they are going to do the job, deliver on the job, and work for you, the investors. It's as simple as that. Are these guys conscientious? Are they focused? And do they have the expertise or access to the expertise? It's not always that the CEO is necessarily the engineer, but he needs to have good people around him. He needs to know where to get those people.
2025, really strong year across global markets. Yet if you follow the news headlines, you're thinking that market's going to collapse every week, the world's going to end. And that kind of paradox really reinforced some simple investing lessons that I learned as a beginner. And the first is that you need to just get started. You don't need tens of thousands of pounds to get started in investing. You just need to start somewhere. You've got to build that habit and get invested at the right level of risk. And that right level of risk is something that you can actually stick with. And that kind of leads on to the second part, which is that markets are always uncertain. We saw that in 2025. They go up, they go down, and it's not your business to worry about it. You're always going to have uncertainty. You cannot predict the next move, but you can try and prepare for it. So you need to remove that emotion out of your investing. And the way you do that is you diversify, you match your risk to your time horizon, and you stay invested.
I learned that a company that has a non-GAAP and GAAP profitability and growing very fast and has a lot of free cash flow is allowed, apparently, in the investment and professional community and the retail community to trade 135 times sales. We need to factor that into our thinking going forward, if there are companies that are allowed to do that.
So my biggest investment lesson of 2025 and the implications for 2026 is really to not get carried away with the hype and to understand that rotations happen and to sometimes, I guess, trust your valuation models and trust your instincts when it comes to investing. So I think coming into this year, many investment professionals thought the US would continue to have a stellar year and outperform all different markets as it has done for the past decade or so. But obviously we've now got the FTSE 100 and emerging markets performing really, really strongly after being undervalued and trading at a discount for a long time. So I think that's my lesson, is to constantly be aware of the rotation dynamics and understand that when things are attractively priced, there might be some interesting opportunities for you to take advantage of.
In 2025, the biggest investment lesson for myself was I should have started dollar cost averaging earlier in the year. So I was under the impression that, markets were going to come down on average during 2025. However, let's say with the S&P 500, of course, it's gone up. Now, I held quite a lot of my funds in cash where I did earn interest. However, the interest earned wasn't as much as the S&P 500 went up. So as a result of that, I feel that I should have put in more funds earlier and in greater amounts and not hold as much funds in cash in my ISA account.
Your conviction positions, right, go against you for longer than you can ever imagine, but then you come right in the end. So I think just being more calm, and the only way to be calm is running the right size. So if you are going to go contrarian to the market, then you've got to do it in the right size. So you can add a little bit and add a little bit. And then just as you think it's going to turn, it will probably go for another week or two.
Investing in 2025 is like paddling in the rapids upstream and your paddle is broken. Everything's being hurled at you. AI shocks, tariffs, geopolitics, you name it. And actually the true winners are those that have navigated this market as investors, but with the edge of a trader, someone that doesn't stick to the market narrative, that pivots and changes up sectors and investing themes as well, are likely to win. And you're going to get more of this in 2026. So buckle up, because it's going to be predictably unpredictable.